Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I'm David Robson, and today we're running the December Tax Countdown, practical, legal moves to lock in 2025 savings and dodge surprise bills. If taxes feel like a haunted house with spreadsheets, breathe, we'll switch on the lights. Here's the game plan. We'll start with a fast year-end checklist, hit retirement, Roths and RMDs, charitably turbocharge deductions, manage gains and losses, tune up HSAs and FSAs, tackle state strategies, grab education and energy perks, and then sprint through small business must-dos. Ready to stop tipping Uncle Sam? Let's get your calendar, numbers, and your confidence in sync. First, the quick year-end plan. Project your 2024 taxable income using pay stubs, brokerage reports, and year-to-date business financials. Then compare it to your likely 2025. If 2024 will be higher, accelerate deductions and defer income. If lower, consider pulling income forward and delaying deductions. Invoice late in December for January payment if you're cash basis, or prepay up to 12 months of ordinary expenses where allowed. Next, map deadlines. December 31st drives Roth conversions, RMDs, placing assets in service, charitable gifts of stock, and employee 401k deferrals. January 15th is the last 2024 estimated tax date. Filing deadlines influence SEP and employer contributions. Finally, list known life changes: retirement, marriage, a new child, selling a property, or a liquidity event. That snapshot tells you which levers matter most when chaos hits. Retirement moves are the biggest, cleanest deductions most people can still control. For employees, check final paychecks and push deferrals to the max. Traditional to reduce 2024 income Roth if your rate is low this year. Don't forget catch-ups if you're 50 or older. If you want employee deferrals in a self-employed plan, a solo 401k must be established by December 31st, even if funding happens by the filing deadline. Employer contributions, profit sharing to a 401k or a SEP, can generally be made up to the due date of the return, including extensions. Choosing between SEP and solo 401k hinges on income level, W-2 versus Schedule C, and whether you want Roth or mega backdoor options. For side hustlers with W-2 day jobs, coordinate limits across plans to avoid over-deferrals, and if cash flow is shaky, automate January contributions so the habit sticks. December is your Roth conversion window. The goal is to fill your current marginal bracket without tipping into a higher one. Run a pro forma return to see how much ordinary income room you have after wages, dividends, deductions, and credits. Converting now can trim future required distributions, diversify tax buckets, and reduce heirs' taxes under the 10-year rule. Mind the cliffs. Medicare IRMA looks at modified AGI 2 years prior, so a 2024 conversion may nudge 2026 premiums. Also, watch the 3.8% net investment income tax thresholds and phase-outs tied to AGI. Have withholding? Avoid it on the conversion itself. Pay estimated taxes or adjust wage withholding instead to keep the entire converted amount growing. Finally, coordinate conversions with capital loss harvesting, charitable bunching, and retirement plan deferrals so the bracket math truly works in your favor when appropriate. Required minimum distributions are a December 31st deadline for most, with a first-year exception allowing April 1 of the following year. Remember, delaying your first RMD means 2 taxable distributions in 1 year, which can spike brackets and may. If you inherited an IRA after 2019, the 10-year rule generally applies, and many beneficiaries should take annual withdrawals to avoid a year 10 pileup. A favorite tactic, use RMD withholding as a backstop for taxes. Custodians remit withholdings as if paid evenly throughout the year, so a single December withholding can cover underpaid estimates without penalties. Just coordinate the amounts before the distribution processes, and document confirmations from the custodian so nothing gets missed during holiday closures or unexpected service outages. Charitable giving can turn taxes into strategy. If you itemize only in some years, bunch gifts so 1 year clears the standard deduction, donating appreciated securities held more than a year lets you deduct fair market value and skip the capital gain, double win. Use a donor-advised fund to front-load several years of giving by December 31st, then grant to charities later at your pace. For retirees age 70, 12 or older, qualified charitable distributions from IRAs can satisfy RMDs and exclude the amount from income, great for lowering AGI-based surcharges. Keep records, acknowledgement letters for gifts of $250 or more, and appraisals when required. Finally, align gifts with your bracket targets and Roth conversion math so generosity optimizes your lifetime tax bill. On the investment side, manage gains deliberately. Harvest losses to offset realized gains and up to $3,000 of ordinary income, then carry forward the rest. Beware the wash sale rule. Rebuying a substantially identical security within 30 days kills the loss, so use similar but not identical replacements. If your taxable income is low, you may qualify for the 0% long-term capital gains bracket. Consider realizing gains to step-up basis while paying no federal tax. Coordinate mutual fund distributions to avoid unexpected December gains. Sometimes waiting to buy until after the distribution date makes sense. And remember that short-term gains are taxed as ordinary income, so timing and holding period matter. State taxes and NIIT thresholds can change the calculus materially. HSA and FSA tune-ups deserve a spot on the list. If you're HSA eligible through a high-deductible plan, confirm 2024 contributions and top off before year-end. Many can take an above-the-line deduction even with the standard deduction. Remember individual, family, and catch-up limits. Flexible spending accounts are use it or lose it unless your employer offers a carryover or grace period. Check the plan and schedule eligible spending now. Next, state and local strategy. With the federal SALT deduction capped at $10,000, timing property tax and fourth quarter estimates sometimes helps and sometimes doesn't. For many, accelerating SALT yields no federal benefit. For others, it can reduce state underpayment penalties. Watch AMT exposure if you still have preference items. When cash flow allows, make clean quarterly estimates and avoid big April balances due. Also, verify payroll withholding aligns with projections if late-year bonuses land in December pay runs. Education planning can deliver quick wins. Many states give benefits for 529 contributions made by December 31st, even if you immediately withdraw for qualified costs later. If you'll claim the American Opportunity or Lifetime Learning Credit, check whether prepaying spring tuition in December secures the credit this year. Coordinate with 529 distributions to avoid double dipping. On the home front, the expanded energy credits reward upgrades like heat pumps, insulation, and efficient windows. Keep receipts and proof work was completed this year. For vehicles, the Clean Vehicle Credit hinges on placed in service timing. Delivery, not order date, controls. Some dealers can apply the credit at purchase. Still confirm eligibility before you sign. For small businesses, December is where bookkeeping meets strategy. Cash basis owners can pull levers, pay bills before year-end, and, where ordinary and necessary, prepay up to 12 months of rent, insurance, or subscriptions. Accrual basis owners should confirm expenses are fixed and that write-offs are documented. Review capitalization policies, then consider Section 179 and bonus depreciation. Assets must be placed in service by December 31st, not just purchased. For vehicles, know the luxury auto limits, SUV thresholds, and whether actual expense or the standard mileage rate fits. Maintain mileage logs. S corporation owners, confirm reasonable compensation, run bonuses on time through payroll, true up shareholder health insurance, and review basis before taking distributions. Evaluate pass-through entity tax elections and payment cutoffs to convert non-deductible SALT into federal deduction where allowed. Refresh your accountable plan so reimbursements for home office, track square footage, and travel are tax efficient. Put working children on payroll for bona fide duties at reasonable wages. Clean up AR and AP, write off debts, document obsolete inventory, collect W-9s, and flag 1099 NEC or 1099 MISC vendors so January isn't a scramble. Let's land the plane with taxes you can actually pay without penalties. The safe harbor rules say you're generally protected if you pay in 100% of last year's total tax, 110% if prior year AGI topped the high income threshold, or 90% of this year's tax. The fourth estimate is due January 15th. Use it to true up after year-end planning. 3 quick case studies. 1. A couple bunches 2 years of donations into a donor-advised fund, finally itemizes, and saves thousands versus taking the standard deduction twice. 2. A pre-retiree converts just enough to fill the 22% bracket, cutting lifetime taxes and future RMDs while staying under IRMA. 3. An S-Corp owner elects PTET and prepays by December 31st, turning capped personal SALT into a full federal business deduction. Pitfalls: missing December 31st action dates, triggering wash sale rules, underpaying estimates, or overlooking state elections and documentation. Bring your pro year-to-date financials, payroll reports, realized gains reports, charitable acknowledgments, retirement plan statements, and a list of expected life changes. Today we covered year-end levers for individuals and businesses to lock in 2025 savings. Don't leave a tip for Uncle Sam. Team up with a professional and make December count. I'm David Robson. Thanks for listening.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.